Good morning and welcome to Time Price Analysis on the morning of Monday, February the 12th. This is a quick overview of where I think we're at in the S&P 500 index this morning. So this is our long-term daily chart, counting up off the February 2016 low, which we have as an intermediate degree wave 4. And from there I can count 1, 2, and the top we saw recently in late January as the top of the wave 3 at minor degree off that February 2016 low, which puts us in the minor degree wave 4, which is the correction we've been expecting. And we were looking ideally for this to come down to between 24.22 and 24.78 before resuming the bull upside move with a target in excess of SPX 3000 next. So the question is, after all the volatility and the sharp moves to the downside that we have seen in the last week or so, where are we within that pattern? Well, there are a number of possibilities. It is possible that the correction is over and that the reversal low from the Friday, the low we saw on Friday afternoon, that was the bottom of all of the wave 4, and that we're now heading on up. So in order to prove that, we need to overcome various obstacles. If I come down and just look at this in the hourly chart, if this is the top of the wave 3, the question is how to count this move down. And my primary count here is that we've got an A, B, and then a diagonal into the bottom as a 1, 2, 3, 4, 5. And from there, we're looking for a 5-wave impulse, but we need to take out this resistance zone here, followed by SPX 2796, and then obviously the all-time high. The alternatives are that the low we saw on Friday afternoon was the A wave down of a larger and more complex corrective, and that we're looking for a B wave up to between 2737 and 2796 in the S&P 500 before we then get our C wave down to either 2422 or 2478. The other alternative that we have to have on this chart is that we've got an A, B, C for a W, then an X wave, followed by another A into Friday afternoon's low, and we're now in the B wave back against this move down here, in which case we should hold somewhere in this resistance zone, ideally at 2651 to 2685 SPX, and then drop immediately down more quickly to one of the target fib levels below us. If I just come across and look at that in the ES, which is the ES mini futures contract on the S&P 500, this was the low we saw early last week, and I did flag in our live trading room on Friday morning that to see a double bottom in the ES would not surprise me. What that led to, we had a day trade short entry right at one of our day trade levels in the ES on Friday afternoon, all the way up here, and caught this move down. And then some of our traders that were brave chose to reverse long and remain long over the weekend at that double bottom in the ES. So you can imagine the amount of points that they managed to add to their account on Friday. Personally, I used SSO, which is the 2 times leveraged long ETF in the S&P 500, and I'm still holding a half position long in SSO as of this morning. So in the ES on this 2-hour chart, we've possibly got an A, then an A, B, C, and then down for the 4. But as with the S&P 500, it is possible that the 4 has now completed, or that we simply get a retrace against this move down for a WXABC straight down into our target region more quickly. And if I come across and look at the hourly chart, this again is that equivalent resistance zone. So between 2652 ES, which is right where we are as of the time I'm recording this video this morning, up to 2727 in the ES. And at 2727, then with this A wave here and the C wave that we'd be in of a B, would have equality. It would again leave dilemma in the actual count, but I think if we take out Friday afternoon's low and come down to this region here, then we can definitely count the 4 at minor degree as complete and be looking to the upside in the US indices from here on.